Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. The odds are that you as an individual investor should probably be using a simple portfolio. And in many circumstances, that means using a 3-fund portfolio. The reason for that is that first off, it keeps things simple. Secondly, it keeps things very well diversified. And thirdly, it has done very, very well, historically speaking, especially since a 3-fund portfolio is going to have very low investment fees. So let's get to it. Let's go ahead and build your 3-fund portfolio using practically any investment broker. And in order to quickly go over what is located within a 3-fund portfolio, let's go ahead and visit the whiteboard right over there. Okay, so here we are talking about the 3-fund portfolio. Really quick, I'm just gonna write up here what the 3-fund portfolio consists of. Let me get my handy dandy marker right here. All right, and when we're talking about a 3-fund portfolio, we're first off going to be talking about a total US stock market index, a total international stock market index, and a total US bond index. So give me one quick second, I'm going to go ahead and write it up here. Please forgive my voraciously horrible handwriting, okay? I grew up on a computer. What do you want from me? All right, millennials, right? All right, but seriously, this is the 3-fund portfolio that we're going to be talking about. But there's one thing that you do need to know about these, and that is that even though these are going to be tracking a index, there are multiple different indexes that could be represented with those. There are more than one index that says, hey, we are tracking the total US stock market. There is more than one index that says, hey, we are tracking the total international stock market index. And there's no way that I can remember this off the top of my head. So I'm gonna have to pull up the iPad real quick, and I'm gonna have to read it right off to you, okay? Because they have some very complicated names when we're talking about the actual indexes. So here we go. Here's 2 for you, okay? I'm gonna give you 2 examples. What index that Vanguard tracks and what index that Fidelity tracks. So first off, we're gonna be talking about the total US stock market index, all right? When we're talking about Vanguard, their index funds, they track the CRSP US total stock market index. And at the time of when I looked it up, they had 4,000 stocks that were represented within that index that they track for the total US stock market index. And when it comes to Fidelity, they track the Dow Jones US stock market index. That index tracks, when I looked it up, 4,202 stocks to represent the total US stock market index. When it comes to the international index, here's where things are a lot different, okay? So that first one we have noted with the total US, they tracked 200 different companies, right? We're included in those 2 different indexes. It's probably not a big deal though, and I'm gonna discuss that a little bit more in just a second. But when it comes to the international stock, when it comes to the international stock market index, here's what Vanguard tracks. Vanguard tracks the FTSE Global All Cap excluding US index. And that index tracks 7,510 stocks. This can change, but that's when I looked it up, 7,510 stocks. Whereas Fidelity, when it comes to the total international stock market index, Fidelity tracks the MSCI ACWI excluding USA Investable Market Index. That is definitely a mouthful. All of those letters stand for something, but I'm not going to say them. All right, so when Fidelity isn't tracking the total international stock market index, their fund has 6,703 stocks when I last looked it up. Take a note of that. So both of these are saying, hey, we are the total international stock market index. That's what both of these funds are saying. However, the Vanguard fund has 7,510 stocks and the Fidelity fund has 6,703 stocks. That is approximately 700 different companies that are not represented in one index that are represented in another index. Now, very, very likely these that are excluded from one fund to the other are going to be extremely small, okay, relatively. So these are most likely going to be very, very small companies that are not represented in one index that are represented in the other index. So in reality, the amount of returns that one fund is going to give over the other, even though they're tracking technically a different index, is probably not going to be that much different. It's probably going to be most likely exactly the same, because those amount of companies, those 700 different companies, are probably so minuscule in size, they probably are not going to represent literally anything. Now, I could be wrong there, but that's what's most likely is probably happening there. And then the last example I have for you is for the total US bond fund. Fidelity and Vanguard actually track the same index here, and that index is the Bloomberg US Aggregate Bond Index. Now we are done here. Let me put this down. Oh, be careful now. Now let's go back over to the regular chair, okay, the regular spot, and let's talk about how to actually build your 3-fund portfolio using practically any broker. All right, and I have a really great resource for you. Now we're going to talk about how to build your 3-fund portfolio using any broker. But before I move on to that, I just want to say there is only one thing that you really need to do to build your best portfolio, and the best portfolio that you can build is hitting the like button on this video. If you're liking this video so far, please make sure you like it and hit the thumbs up. It really does help me out, and I really would appreciate that. My cat would also appreciate that as well. Okay, but seriously, let's go to the computer now. Ooh, cat fur. Ooh. Let's go to the computer now and let's actually see how to build a 3-fund portfolio. Okay, so here you can see on the screen the resource I was talking about, the 3-fund portfolio by the bogleheads.org wiki page. And that just means people who are fans of Jack Bogle, the man who created Vanguard. So on this wiki page, they have the 3-fund portfolio and they have some cool examples for us. So you can see right here in the contents, it says choosing 3 funds. All right, so we go ahead and click on that. It'll put us what I was just telling you about, total stock, total international, and total bond. But this can be created with multiple different companies. So scroll down right here and we can see how to create the 3-fund portfolio using the first one is Charles Schwab. Then we have Dreyfus. I don't know if I'm saying that right. Sounds like that actor, right? Louis Dreyfus, you know, from Seinfeld. I don't know. Does she own that? No, I'm just kidding. All right, and then next you have Fidelity, Northern Funds, and you can see it goes on and on and on. And that is all with mutual funds. So you can see right here, mutual funds. But secondly, you can also create the 3-fund portfolio using ETFs, which is what I have done. In my portfolio, I use ETFs. So here you have the 3-fund portfolios using ETFs. And the great thing about ETFs is that they can be pretty much transferred between any kind of broker. So it's a lot more easier. It's a lot more easier. You can't say that. It's a lot easier to transfer ETFs than it is mutual funds. So you have the BlackRock, iShares, Charles Schwab has their ETFs, State Street, and then what I use is Vanguard's ETFs. So I use Vanguard's ETFs on M1 Finance, and we're going to talk about that more in just a second. But this is a really great resource for your 3-fund portfolio. Not only does it have how you can build a 3-fund portfolio, but also it has so much other information on the 3-fund portfolio, like why it's so great and all kinds of cool stuff. So, and I'll put that in a link in the description below. But before you go click on that link in the description below, really quick, I want to know from you in the comments below, which broker do you primarily use? Which broker do you have like most of your money with? You know, is it Fidelity? Is it Vanguard? Do you have M1 Finance like I do? Please let me know in the comments below. I'm really curious so we can start a discussion on that. But also when it comes to the 3-fund portfolio, it's really great to know what to have in a 3-fund portfolio, but it's also really important to know how to structure that 3-fund portfolio. More specifically, what your asset allocation is going to be. And that is an entire video all of on its own. You know, asset allocation is an entire book all of on its own, maybe an entire encyclopedia. But, you know, as a general rule, you probably want to be more aggressive if you want higher returns. And if you want to be more aggressive, that's probably going to mean that you're going to need to have a higher allocation towards stocks and a lower allocation towards bonds. And of course, you're going to have to accept higher volatility. That is just the name of the game. Everyone's heard it before, high risk, high reward, okay? And what we mean by risk really is just high volatility with the investments. Stocks are going to have more volatility than bonds are, but they're also probably most likely going to return higher returns than bonds will in the future, as they have done in the entire stock market history. But if you're still watching this video up to this point, that probably means that you want a practical recommendation here, right? So even though you can have your 3-fund portfolio with any broker, you want to know what broker you should be using, all right? And I don't blame you. Sometimes you just want to hear what to do, right? So you can take action on it. So here's how you can take action on it. So I would highly recommend M1 Finance, and not only because I have partnered with them as an affiliate, but also because I have literally put hundreds of thousands of dollars onto that platform. I've put the vast majority of my net worth onto M1 Finance because I gave it a try. I tried it out and I really enjoyed it, okay? I used to use Fidelity. I started out with Fidelity Investments. I started out with that broker, but I migrated into M1 Finance because it was such a much better platform, a better investment platform for me and my goals. More specifically, it was very clean, very simple, but also it has some very great automation tools. And I think that automating your way to financial independence, automating your investments so that you can automatically generate, you know, great wealth, I think that is one of the best things that most of us can do. So if you haven't already, if you don't have an account with M1 Finance, I highly recommend that you at least give it a try. Open up an account. They have very low account minimums. They're always running bonuses for you to deposit a certain amount into your account so you can get some extra free money. So go ahead and check it out. I'm going to leave a link in the description below. I'm going to leave it in the pinned comment below, or alternatively, you can go to oncashflow.com/M1. So very simple. It's it's going to redirect you to the M1 Finance page. If you do go through my affiliate link, it greatly helps out my channel because I could possibly get a little bit of extra bonus, and you could possibly get a little bit of extra bonus if you deposit a certain amount, because they're always running promotions and you definitely can't go wrong with that platform. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.